Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on the 29th of June, 2017. It's Thursday morning. Thanks for joining me again. And always, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance as we sit here today is mostly mixed, except for crude oil. Crude oil is up at 45.20, battling in the balance from 2 weeks ago. The balance range is 45.37 to 44.32 before we get into the sell-off range. As I've said before, crude has been very interesting. Crude has a base under it now from 43.50 and to 42.53, in my opinion, with a point of control at 43.15. But that's the product that's leading the pack today, up 47 cents, 1.07%, followed by the euro. The euro actually got over the 113 handle and is trading at 114.45, up 15 pips. The S&P 500 is unchanged. The U.S. Treasury bond is down over a handle this morning, and we see the same in the euro bund, the euro stocks, and so on. Mixed bag this morning. A lot of different directions. Currently, the Dow's up 8 ticks. So that's how things look like right now. In the overnight, the news, there's just been a lot that came through overnight. I'm not going to go through it all. I suggest you check out one of the probably thousands of financial news sites. But the main items is the U.S. Federal Reserve Capital Analysis Review showed that 34 of 34 of the major U.S. banks had passed their have passed their stress test requirements. Capital One's being asked to resubmit its plan for review. And then overnight, we had a slew of releases. China says it's worried about the U.S. investigation to steel and aluminum and the potential for tariffs there, the souring relations. Germany came out with its CPI and Saxony 0.2% versus negative 0.1, so very strong there. Also, Germany, the Eurozone came out with its June business climate indicator 1.15 beating 0.94. Final consumer confidence negative 1.3 versus the same, so in line with expectations. And then in addition to that, this morning we had the U.S. GDP annualized Q on Q of 1.4% versus 1.2, also strong. Personal consumption is very strong, almost doubling the expectation at 1.1% versus 0.6. And then a half hour ago, we also got U.S. initial jobless claims came in a little bit worse, 244,000 versus 240,000 estimated. Continuing claims also slightly worse, 1.95 million versus 1.94. Looking at what we're expecting on the calendar today, as far as what's left, the only thing I see remaining is the 1030 natural gas number, and then we're getting Fed Speaker Bullard in talking about monetary policy in London at 1 p.m. Eastern. So 10:30, 1 p.m. Nothing earth-shattering coming into today. Let's take a look at what we expected yesterday versus what we got. The primary expectation yesterday is for a rally. Expected the market to go strong. If there is a dip, the key price in the area was the 24.28 zone for the LVN, which is also the prior week's low, and we were trading right at it. So the expectation is that if we hold above, that I'm going to be looking bullish strong into 35, 75, 35.50 with an extended target of 38.50. There's plenty of support that I saw below there. The 24, 22, 50 areas as well as the 24, 20 or areas of expected support. So I was looking for yesterday to build a high volume node or the point of control in line with the MC point of control at 3550. That was a primary hypothesis. This hypothesis was dead on. The market extended to 24.40.50, which is a price from 2 days ago, the LVN from 2 days ago, and it actually hit that surprisingly, but that plan was dead on. The alternative is the market tries to push higher and then continues the day time frame sell-off, one time framing down to continue lower. That's contingent upon testing the 3150 area and then rotating back through the 28 and unable to get back above the 28, then I would be looking short for an impulse down. The impulse happening somewhere down here for a test of the prior day's low. So looking for a target at the low, test of the prior day's low, and then pulling back into the range for the buy the dip trade there, and then a return back into the 24, 25, 26 area. That did not happen, but that was a very strong potential for that plan. Here's what actually happened. So, basically pretty textbook. We opened up higher, started to look like hypo 2, started to look weak, and then we had this impulse up of 6.5 points, a second better than second standard deviation move up. So the plan is to find a pullback area, the mid VWAP, OS high, and any zippers in the area would do. Was looking for 28.50 on the pullback, pull back to 29. In this market, I'm finding that you, especially on the buy side, you have to scale in early and separate, create distance between your scale ins. That's essentially what I'm doing. I'm finding that I'm missing a lot of trades because the pullbacks are very, very tight. The market tends to impulse and flag really high before the next leg up that I'm trying to catch, as opposed to a market that's visiting the midpoint or somewhere thereabouts, that pulling back deep and against something of substance to lean against to go for the next swing up, which gives us more room to scale out at the top and so on. So it's definitely tough to get in there, to get into these trades these days. This is not the auction has been pretty methodical, pretty organized, but this is not. The market's generally not this tight. It's been tight here for the last almost a year now, since last July, but it's not normally this tight. So it's something that we kind of have to get used to. And I've been preaching a lot about patience and being picky because of it. It's not so friendly right now to day traders. It's very friendly to swing and long-term traders as the market pushes new highs consistently. So this is what we got. We have a good set of good bunch of zippers underneath us that formed this high volume node. We ended up yesterday again at the 24 40 50, which is a key level from just a few days ago and last week. And we ended up with what looked like a very poor high. The market really traded technically. Yesterday was a trend day technically. The point of control kept shifting up, and also we exceeded double IB. We finished with the point of control in the upper quarter, and with a pretty poor high. In other words, the market ran out of time before it could test and find those sellers up here. So we ended up with a weak high. So the expectation is overnight we would continue to push higher, and that's what we did. So we're into last week's range again. So you can see the weekly low on the flex levels marked down here, the weekly lows down here, the mid of the month. By the way, past performance is not indicative of future results, but if you study the where the market has closed versus the mid of the month over the last, I believe I did a test of 54 months, which is not a large sample. About 75% of months end up closing above that midpoint. So for us, This month it's 31.50. We're looking for a close above 31.50 as a higher potential. The outcome is 50-50. Could happen, could not. But historically, this is what we've seen over the last 12 months. We have, I believe it was 10 out of 12 months closing above the midpoint of the month. This is why I have it marked right here. So we're back into the prior week's range. The high of the week's range, which changes the one-time framing in a sense back to positive, uh, that high is 51.50. So we're about 10 points away, 13 points away from there, and still holding. But the day time frame has changed its one time framing down from down to up, and is reversing. Yesterday was a reversal day, so we're looking to push on the buy side much more than on the sell side. Target above is 51.50, the all-time high. This is a summary of yesterday. Let's move on to what we did overnight. Here's the overnight. As soon as we open, this is a clear sign of an incomplete auction. This is yesterday right here. Oh, yeah, right there. There's your week high. As soon as the market opens, it slips right up. And that is typical of an incomplete auction and a week high. It just cannot, it ran out of time and therefore could not find that excess high. It found a small excess high early on, went sideways for the Asian auction, and then the Europeans came in, tested that high again, and then ended up selling off and back into the prior day's close. And then we just popped up on some European releases early on, and we're looking weak this morning. The overall stance, the overall stance in the overnight. Look at the volume, 226,000. Pretty heavy volume. It's not rollover. There's no fundamental reason. There's no fundamental reason for the volume being high. It's much more about market driven behavior here. So pay attention here. There's a lot going on in the overnight session. There's a lot of participation. We're still seeing a lot of movement in the fundamental products, the fundamental financial products. Notes, currencies, things like that are still cranking away, and so I'm expecting that we're likely to see a pretty big sustained OTF move away from here. So that's how things are shaping up in the overnight. Again, the overnight's below mid, below the point of control, below VWAP, back into the prior day's range. It's looking weak. I'm expecting that when we open, we would test lower first. So let's get rid of the flex level for clarity. So here we go. We're looking for an open auction for the market to attempt higher, lower. I'm looking for a very choppy open. We're opening right in the point of control. This is a turbulence zone. I'm looking for 34.50 down to 34.75 test. Looking for the market to build some more. A quiet auction. And then I'm looking for an impulse up that pushes us back up into the overnight high. And then for the market to settle somewhere in between, but I'm looking for a strong up wave this morning. Okay, the Nasdaq's with us. The Nasdaq sold off early. The bigger issue, the Nasdaq issues of the Nasdaq were weak yesterday morning and gained strength into the afternoon. Overall, I believe that the bigger play is on the buy side. So our job this morning is to wait for the bigger participants to show us a big move up, then find an area to lean against, put out some reasonable risk, and then look to get long into the overnight high of 24.45. Expect it to be cluttered in here because we're against the point of control. We're against the prior MC. Today, I'm going to leave you to come up with your own hypo 2, and I will compare notes tomorrow. I'll put up the hypo 2 tomorrow for today, but I'd like you to do that job and to come up with your own idea, and then we could see how the market plays out. Okay, good luck today, and I'll catch you tomorrow. Take care.